So hi there again. A very good afternoon to all. There was a power failure, and due to which there was a internet connection issue that was happening, but hopefully it has got rectified now. Basically, today I will talk about two companies that are in the travel domain and are set to do extremely well. So over the next say 2 3 weeks. We'll discuss about that in a bit, and hopefully we'll discuss about the markets in detail, as well as uh, we'll answer your queries as well. So I was just getting the software ready for all of this. Basically, if you see in the market has declined over the last, you can say, uh, 1 week or so. There has been a decent decline in the market. So we'll just discuss about, because there's a major, you can say, level that has been breached on the Nifty, and we are not quite finding our way, like stabilizing in the market at the moment. Let more people join in, and then we'll discuss about the Nifty 50 and the BSC small cap as to how things are panning out on that front. So we'll discuss about both, especially if you look at the Nifty. It has broken a very strong support of 17,500. So let's get things started in earnest. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Um and before I talk about the Nifty and these two couple of stocks, uh, it's a small request that kindly support me on Patreon. If you can't support on Patreon, there's issues with payment, then you can email me and become a member on WhatsApp, or you can click on the join button to be part on YouTube as a member as well, and you get short-term, long-term calls on the markets, and you can ask me any number of questions, one question per day, with respect to markets and stocks. Uh, so now let's just understand as to how the, you can say, Nifty is behaving, and how we are seeing as we look at the small cap index, both small cap index as well as Nifty, as to how they are performing. So let me take you to the money control website, and we'll discuss about Nifty and small cap, and then we'll come to those two stocks that I wanted to talk to you about. So here we are on the money control website, and as we see here, Nifty is around 17,460, and there was strong support around these 17,500 levels, which is getting breached. And this is what I discussed last week also, that if 17,500 goes, our next support lies around 17,200, around 17,150, 200 levels. If you look at the 200 EMA is around 17,250 to 300, but I think we are headed lower. We could be headed towards, if I just expand this, you'll be able to understand better that we could be headed towards these levels, and these were the levels in October of 22 when we went to something like 16,800, and this is what everyone is talking about. And I think it's inevitable, once this 17,500 has been taken out, that over the next couple of weeks we could head towards 16,800 on the index. And if that is to happen, then we could see 5 to 7% decline in major stocks, and around 10% decline in the mid cap stocks from current levels. So anybody who is trading short term can probably book out and wait for this decline to happen. My thesis, or our thesis, analyst thesis, will change if the market takes out, you can say, 18,000 levels. I don't think until 18,000 is taken out, anybody would be looking to go long big time. Next support lies around these levels, which is 17,250 or so. But I think that will also be taken out, and we'll head towards 16,800, 850. And that is where real value will emerge on the Nifty. Why I say that is because if you look at the earnings, and let me just give you an idea of the FY23 earnings, and we'll go to the FY24 earnings as well. So in FY23, we would do somewhere around 850 rupees. Based on that, even 20 times is 17,000. So we are slightly on the higher side in terms of PE with respect to the current earnings. Even in FY24, they are expecting no more than around 930 or so rupees of EPS. People are expecting 950, but I think 930 is where we will get to in FY24. Based on that, even 18 times is around 16,800. So I think 16,800 over the next 2 months is not out of the realm. Over the next 1 month, I would say, not 2 months. And it is not to say that everything is lost once we reach to these levels, because once we reach there, we'll be trading at 18 times 1 year forward, or you can say by March, if we reach there, then we'll look at it, because FY23 will be over. That okay, this year we'll be having 930, 940 rupees of earnings, and 16,800 looks a decent support. Means this 16,750 will be a long-term support, and I'm not saying that this cannot be breached. This can be breached, but around 16,800, a lot of value will emerge across the board on the market, and then probably we'll have a seminal rally. So if we look at the BSC small cap index, if I open that up in a while, we'll have an understanding, because we are invested into small and mid cap. Most of the retail investors are invested in, you can say, the small cap index. So if we look at that, then we'll have a better understanding as to where our stocks might head over the next month or so. So it is around 27,500. Surprisingly, it held on compared to the Nifty, and we are above that 27,300 levels. That is very crucial, because if that gets broken, we could head towards a 10% downside towards, say, 24,000. So let's look at the market, and let me have a line chart in here and expand this all together. So on the small cap index, if we have a look, we are at 27,500. The recent lows in December were around 27,000 or so, around 27,200 or so. If that gets breached, which it may be, because at 16,800, I don't see a small cap being at 27,500, then we could head towards the first target we are looking at is 26,300 or so, and then even lower. So I think we won't go to those levels of June, where we went to, I think, 24,000, 23,000, but we'll be somewhere around 25,000 levels. I think 24,900 to 25,100 is what I'm looking at. So at 25,000, you can say, at the small cap level, which is 10% down from here, 8% down from here. At 25,000, again, my thesis is the same, that if 25,000 comes around, that means if you look at from here on in, say March of 2022, there has been no rally whatsoever, because in March of 2022 we were at 26,000. From 26,000, if we were to go to 25,000, we would have lost 4% over that 1 year period. That tells me that if we go further, and if I probably extrapolate this chart over a 5 year period and look at probably since October of 21, when the market went up sharply, and this was 7th October, it was around 30,000. So from October of 21, if we were to end up in March at around 25,000, there has been no rally whatsoever. In fact, we would say that we are down somewhere around 15-17%. If I say 5,000 points down from those 30,000 point, you can say, rally is around 16.6%. So we would be down 16.6% over an 18-month period if in mid-March we will be there in mid-March and March. So that tells me again that this will be a huge trigger for a big rally in the market, and based on that, I believe the small cap index could sharply move up if we go to somewhere around 25,000 levels, which we went to in May. I think we could be in for a huge move of 40%, even a 45% move on the small cap index in 2023 by the end of the year, and before elections or the election year. So I think from April to somewhere around December, over this 8-9 month period, we should be having a decent amount of rally in there. So be ready for a decline to 16,800 levels. And if that is, you can say, if 16,800 is somewhat saved, then and 25,000 on the small cap index, then we are probably ready for a move towards 36,000 on the small cap index, 20,000 on the markets. I think markets could hit new highs and then probably decline from there. So that's the call, because as I explained, that by December of this year we will be absolutely discounting FY24 earnings, which would be somewhere around 930 rupees, 940 rupees. Based on that, the market cannot stay at 17,000 or somewhere around it. It should go towards 2021 times earnings, and that would be closer to 20,000 levels. So that's my analysis. Let me know in the comment box what you feel about it. Now let's discuss about the two companies that I want to seriously discuss about, because these two stocks have declined from the top and are looking attractive now for a 20 to 30% upside over the next 3-4 months, by the time the summer season, you can say the holiday season ends, that is by June end. We could see 20-25% upside in both of them. So let me take you to the screener website this time around, and we'll discuss about the first stock in this list, which you would have seen. So this is IRCTC. So IRCTC, in my opinion, is looking pretty good. I feel that IRCTC over this period could end up performing exceedingly well. I don't think that we have much downside. So what I feel is that here the margin of safety is more. You can keep a stop loss and then move ahead and take a trade. This is a stock that has come to the radar after October 21. So it has been again nearly 18 months, 16 months since we have talked about it, and we all know about what happened. But let me just give you a snapshot of what went on. So actually the stock was just meandering around these levels, which was 260 to 280 levels, 260, 290, and all that. And then from January of 21, the, you can say, the move began, and from Jan 21 till October of, you can say, 21, over that 10-month period, the stock went from 260 to around 9 to around 1100, 1200 levels. So this was 4.5x in 10 months. That's what happened with the IRCTC, with heavy volumes, and suddenly from there on in there has been a seminal decline. Now what we are seeing uh, is that the moving averages and everything has now come together, and the stock has been declining. A time wise correction of nearly 16 months have taken place. It will be more than 16 months have taken place. Price wise correction from around 1200, the stock is down to 600. 50% decline has taken place. So purely on technical terms, although on numbers front also it's looking pretty good, I think this fall that took place just recently from around 650 levels, 650, 660 levels, all the way to 600. Uh, Probably this is the last hurrah in the fall, and this is the time to get in. So, just to give you an idea, you can buy here, in my opinion, at 600, 610, with a stop loss of this, with a stop loss of the 52-week low, which is 557, and you could see 750 on the stock. So I think a good 150 rupees, 25% upside is possible. I won't say that this is headed to 1200 and all that, but I think 750 levels is very much a possibility on the stock. And we could see that, and then probably this is the 750 levels that I'm talking about in November of 22 that we reached. And probably then it would just go into consolidation again. It's 200 EMA is around 680. Once it crosses that, another 10% upside is very much possible. So stop loss 550, target 750 is what IRCTC, in my opinion, looks like. In terms of numbers, it has been doing well. So what the street is spooked about is the fact that in the December quarter and September quarter and even in June, their margins have come down appreciably. Even in March 22, it was around 40%. The margins were in excess of 50%, well in excess of 40% earlier than that. But what you need to understand is that during this period between June of 21 till March of you can say till December of 21, we have had the second wave of the pandemic. All right, in the first wave of pandemic, the you can say travel stocks were hit very badly. You see here in the September 20 quarter, they did 89 crores and 224 crores and 339 crores. Now, what happened was after March 21, when the first wave was done and dusted, people went out big time in traveling and in Holi and in all sorts of, you can say, festivals. They went out, they enjoyed, and they traveled. And then we had the big hit of the second, you can say, wave that hit in uh, around April of 2021. So even in the June quarter, we see here June 21, it was a reasonable sales even in difficult circumstances and margins of 46%. So what IRCTC did well was cut on costs, and eventually they did not have to spend so much on their trains, etc., because many of the trains were not working, and whatever that was working, they ended up making money on it because they could increase the prices, etc., and all. So people went ahead and traveled in June, in September, in December big time, and things went on like that. After this revenge, you can say, travel of around 9-10 months, things started to slightly flatten out by March. So this is what you need to understand, that from say March 21 till December 21, people traveled as a revenge travel way because they were not able to travel for a year and they were not able to move out of their houses. So there had to be huge sales, be it IRCTC, be it any other company, and I'm going to discuss another company in this regard. We have had very strong sales for that period. So you cannot compare this period from March to September to, I think, the next 4 or 5 quarters, what the company did. So how would someone compare this, or how would someone should be comparing the stock altogether? Basically, they should be doing is that December 22 numbers should be compared with December 19. And if you look at it, 716 crores of sales in December 19 versus 918 crores, a good 30% jump. 266 crores of operating profit versus 326 crores, which is around 50 crores increase. Another 20% jump in operating profit. Margins of 37% in 19 versus 35% this year, which is okay, although it has dipped, but it's still okay. And eventually net profit of 256 crores versus 206 crores is what we need to look at. So on all parameters, it has grown by 20 to 25%. Now comes the valuation part. So if a company is growing by around 25%, and if it is trading at 100 times or 120 times, that is absolutely exorbitant. But what has happened with the PE for IRCTC is that from a PE of around 300, 324 in that peak of October 21, it has gone down. And EPS, if you see here, EPS of 3.4 rupees has gone to 11, 12 rupees. and the stock price has remained there or has declined 50%. What has happened basically is that the PE has dipped to 51 rupees. Uh, or 51. I believe such a monopoly company, although being a government company, yes, there are red flags upon it with the government stake sale and many other things, can continue to trade at 50, 55, 60 times. So even if it goes up 25% from here, it will trade at 60, 62 times. So I have a feeling that we have a good 25% upside left in IRCTC based on the valuation front as well as technically, and one can keep a stop loss at 557 for a target of 750 on the stock. So that's the first stock that I wanted to discuss. The second stock that I wanted to discuss was VIP Industries. This is one of the stocks that I gave a call on during the pandemic around 300. It has done exceedingly well to go towards 800 but has come back. I think around 650 or so. VIP Industries look pretty good. I won't be surprised that you can see 20 or you could see say a 20% upside on VIP Industries. We're going to discuss that, but just a call on their business selling, you can say, suitcases and briefcases and bags, etc. With the April season coming up, April to June, till probably July. So this June quarter could be big for VIP. It has been big for the last 2 years. I think this time around also June quarter could be pretty good. And with the stocks declining, let me again take you to the screener website. But with the stock declining, I have a feeling that now is the time to really get in. The PE of the stock is now 58. The stock is below the 200 DMA, so technically speaking, not quite at this point of time unless it takes out 670 again. But if the stock dips and by 16,800 on the index, if you get the stock around 600 levels, 620, 600 to 620 levels, that is where one needs to get in. So any 4-5% decline on VIP Industries, it's a buy. Currently trading at 58 times earnings, slightly stretched, and that is why I would like you to buy at 5-7% decline. But if you look at the numbers have been very decent. So in December 22 they did 397 crores. This time around they have done 526 crores. A 14% margin has been maintained, and you have an operating profit of 73 crores, which is a 20% upside on what they did in December 21. So things are looking fine for the company. Overall profits were around 44 crores, 51 crores this time around versus 44 crores, which is again a 20% jump, 15-18% jump. So I believe that on declines to 620, 600 levels one can accumulate. So probably buy at 610, stop loss 580, and target again something like 770, 780 on the stock. I think new highs could be made over the next 3 to 4 months. So that's a VIP Industries for you from that time frame perspective. All right, guys. So I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow a channel. That will help you also ask me questions and eke out answers in greater detail. So let's see what are the queries that have come up so far. All right. Let me know your opinion about Mumbai-based Jagmar infra projects, long-term or short-term. So, see, in infrastructure and capital goods, etc., you can buy probably infra ancillary stocks. You can buy probably stocks that are related to infrastructure, but not directly real estate. In real estate stocks, probably you can probably look at Prestige Estate with the kind of valuations that we are in, or you can probably look at Godrej Properties now that it has declined so much at around 1100, 1050, but not quite, I mean, to get into these kind of real estate companies. So Saga, Reliance at the okay, Reliance Industrial Infrastructure I don't track, so I won't be able to comment on it. Won't be able to say much. IRB Infra again, decent company, but again I would like you to get into realtors or probably infra ancillaries, which are tiles. You can say wires, cables, paints. Those companies could end up doing better. Abhijit FL is declining and now has gone down to major, I mean, broken major supports at 1020, 1010. Probably around 940, 950 you can accumulate, but again, the results have to support the way the stock is falling is not giving me much of a confidence in that sense. So, Shriram, I think if you say sequent, complete avoid, the company has gone into losses, and until it comes back into profitability, probably what has happened is that their Turkey business has hit them hard. And so, and complete avoid, I don't know from where the stock will recover. It is coming at reasonable valuations, but the numbers need to improve. I mean, you cannot be a loss making company and hoping that people will invest into your company. So that's the call. So Sagar SpiceJet looks good. There are, I mean, there are news. There is a lot of news about SpiceJet and larger players getting into it and many other things. Around these levels with the kind of numbers that they have given, SpiceJet looks a better bet, but I would still prefer pure consumption plays, cash kind of companies rather than going into airlines. Yes, short term you can probably pick. Uh, so Buchi Babu, thanks for your support. Hindware Home Innovation need to come up with very decent numbers. There are no issues with the company, but the numbers are not supportive, so people will not invest at these levels. Look good, but numbers need to improve. I would only buy fresh when numbers improve. So that's the call. I would say Ravi, Lemon Tree is a better pick than Is My Trip. Is My Trip is still expensive both on the price to sales basis and on PE basis. Lemon Tree has declined sharply from the top, and I think hotels could continue to perform. So that's the call. So Saga Venki's difficult to say. I would prefer buying into other sectors. There are issues with this sector as well. And the company hasn't done that well as I expected 2, 3 years back. Yes, you can trade onto it with a 5, 6% stop loss, but overall, I won't say that Venki's is something to be really looked at. Okay. Phoenix Mills, I would say avoid at the moment. I've talked about the real estate picks that I mentioned. So Tata Chemicals, Rama looks good, but normally it has traded at you can say a PE of 11 to 15, and currently it is trading at the same PE. Uh, it's kind of an enigma that people have not given it larger valuations or bigger valuations, but looks good at these levels. Yes. Don't add further, so go. In fact, you can book profits because if you are if you are in good profits, book profits in privilege and wait for this market decline that I have talked about, and probably then get into the stocks again. Next support in Bajaj Finance is around 6,000. That's what I feel. And if that goes, then 5,400, 5,500 is where Bajaj Finance is headed. But I think the long term story in Bajaj Finance is intact, say 8, 10, 15 years. But that kind of a multi bagger tag that it used to have that can generate 20, 25% for you, I think that time is over. I think it can generate 15% CAGR for you as an investment, and I won't say that's a very good trading pick. So that's the call. All right, guys, thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away. when I post it, and kindly support me on Patreon. Thank you. Thanks a lot.